Hey traders, this is Ron Hayden at Market Tamer. Happy Sunday. Hope you're having a fantastic weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. Kick off here with the diamonds. Up a little bit on Friday. We continue to put in higher highs and higher lows. We're basically right on the 5-day EMA. The red line is your 20-day EMA, and the orange is your 50-day SMA, which is an exponential moving average. Higher highs, higher lows. You guessed it, we are bullish heading into the first week of October. The SPY, which I have a bullish position in, zooming in here, same thing, higher highs, higher lows. Volume is not all that bad, so bullish heading into this week. The Qs were down just a teeny bit on Friday, but look how this 50-day in June, July, September, a couple times, right? It's acting as a line in the sand. So for the Qs, just like I've been saying, if we get below that orange line, the 50-day institutional moving average, that will be a sign the trend might be turning from bullish to now either stagnant and or even pullback territory. If I go to the IWM and the MidCaps, so IWM is your small caps, MDY are the MidCaps. They are both topping out right as expected. As September began, they're having some trouble and they're pushing lower. That's IWM. Here is MDY. Both are underperforming right now. In fact, IWM was under the 50-day. On Friday, the MDY got back above it, but you can still see we put a high in. If I go over to financial and I show you the IWM over the next 10 weeks, you can see exactly, look how the next couple weeks specifically drop. So if I move this over, let's say, to just 3 weeks, you'll actually see the dip, and then I pull this over, whether it's 11 weeks or more, you can see exactly how it trades historically. We are in the decline period. So if you think back to a couple weeks ago and you're saying, they're breaking out, I wonder if they can sustain it. Historically, they don't. It's not saying the stock's going to crash, but you can visually see here at financial how it's coming down. This is the dip, which the broad markets do too, S&P, Qs, Dow, but the IWM and the MDY are the two worst of the performers. So let me just show you MDY and you'll see the same thing. Look, dip, we get into the middle of October and then we're off to the races. So just heads up, if you're following IWM and MDY, if you had access to this information at financial, showing the historical track records, you wouldn't have been caught off guard. You would have known exactly when to expect a top and then a slow drift lower. All right, let's keep moving here. Let's go talk about Tesla, TSLA. It was down pretty big on Friday on news that Musk is going to be no longer chairman, pay a $20 million fine, remain CEO. I've been talking to you guys about this stock is all over the place. It's like a 5-year-old on a sugar rush. It's really hard to predict. And the level right now, 250, seems to be being defended or anything near there. If the stock breaks below 250, that would be noteworthy because we've had previous bad news and that marked the bottom. On the upside, watch 370 to 380. Anything in here, it's a whopper of a trading range, 120 point, 30 point trading range. It's why I've been saying not covered calls, but collar trades may not be the end of the world right now until this thing calms down, or at the very least, maybe a married put strategy, which is, as an example, 100 shares long stock and 1 long put. How about Facebook? Another data breach. Stock was moving higher. It gapped lower in earnings. It can't get over the red line, the 20-day EMA. It did finally do that on Thursday, and then we rolled right back over. And if you look real close, gap up, gap down, retest. This 170 area is an inflection point. Not that I say, it's what the money says. The buyers and the sellers are defending or rejecting 170. So for me to be somewhat bullish on Facebook, or at least not bearish, stock needs to get above 170. Until that happens, it's neutral to bearish over the near term. NVIDIA had a good day on Friday. See the stock gapped up, if I zoom in closer here, gapped up close near the highs of the day, took out a previous high. This is really strong, but there's previous highs here from September 4th, and the close there was 283.70. We get above there, that would be a breakout to new highs. NVIDIA starts to take off as we get closer to the end of October, not now, but right now, it's starting to pop, so maybe it's going to run a little early. But so far, Friday is a one-day event. I could just define this as a new trading range. We'll have to see. More on that on Monday and Tuesday. We'll keep an eye on it. Here are the banks, XLF. I want to bring this one in. Had a little bit of a breakout here, and then it was followed by bearish engulfing. That was a warning sign. Gap, slightly a gap lower, closed at the lows. That confirmed we're moving lower, that this is a bearish engulfing pattern. You would go to the previous swing low as support. We've now gapped below that. The way the volume is picking up, I basically put 26.5-ish as the target, which is still another full dollar lower on the banking ETF. And that's probably going to put a little in the S&P right now. If the banks can't come along, it's going to be hard for them to push higher. And in fact, they were down 6 days in a row. Taking a look at, try this again, BB, which is now BlackBerry, earnings related, but we still have lower highs. So earnings related pop. Let me just do this. This is what I want to do. Now, if I draw that, you can call it a break of the trend line. But what I'm trying to draw here, and the point is lower highs from a closing perspective. And then if I come in here, while it's not perfect, I can still get basically lower lows. So despite Friday's massive rally from around 10.5 to up as high as 12, we really haven't done a whole lot. We need to see follow through. Now, my best guess, that kind of volume should bode well going into this coming week. We did barely close above the 200-day, not a whole lot, but a little. The next target, you go back to the previous swing highs, which is 1250. So 1250, 13-ish, and then back up towards 14.5. If I wanted to try and trade this short term, I'd probably stick with a 5-day EMA or an 8-day EMA and see if there's going to be some follow through. And any close below one of those, I would consider just getting out. And another stock that was in the news in terms of moving, BTU, Peabody Energy. The stock was up around 41 bucks or so. Now it's at 35. Ouch. There's a little bit of a mini triple bottom here, just 3 little tests around 35 bucks. If that falls, holy Toledo, 30 with a question mark, 28 with a question mark. So this thing really got taken out behind the woodshed. Definitely bearish right now. And if it gets below 35, look out below potentially. So that's it, folks. Again, for the S&P and the broad market, bulls have the edge. Whether it's spiders, Dow, Qs, the IWM and the MDY are doing a little worse right now. But the fireworks really don't start until we get a couple more weeks into October here. And that's when the seasonality really kicks in. All right, wish you guys a great rest of the weekend, and I look forward to seeing you in the next video. Take good care.